Okay, folks, so we've got a lot to talk about. Number one, we need to discuss today's market. Number two, we need to discuss very violently a stock that went up about 50% at highs today. What's the deal? Is there more upside? And what is the overall story here? Timestamps below, let's get to work. So today's market had a setup to be one of the worst days of the year. Last week was a green week after 7 consecutive down weeks, giving extra upside to be eaten away. You also had Jerome Powell talking to Biden, a president who has a ton of political pressure to see to it that inflation is under control. And then most importantly, you had this sudden escalation in the oil crisis where oil goes up to the highest point since March, spurred by the EU agreeing on more sweeping bans of Russian oil imports. Oil prices and commodity prices as a whole are arguably the biggest kryptonite to any form, really, of economic improvement. The more expensive commodities are, the more stubborn inflation is going to be. But also the more of people's disposable income will be eaten up and can't be spent elsewhere. Rising inflation with lower economic growth is usually stemmed by a huge increase in commodities during a period of time where people don't have any money to spend for anything else. Energy, of course, is usually and is this time the driver of that kind of commodity crunch. And that's quite frankly a very hard economic environment to get out of. And so when you see huge and sudden uptrends and escalation in the oil markets, that's usually when you see some of the worst bloodbaths in the stock market. But not today. While the markets did go down today net, they mostly brushed it off. I mean, 0.5% down in the S&P 500, that's like a very bullish day for 2022. If you jump and roll around in a fiery pit of lava, and once you leave, you find out that only your pinky toe is burnt, well, you know something weird is going on. And even crazier so, the rebound rally the last week left markets almost entirely unchanged in the month of March. If you look at the month-over-month change from the last trading day in April to close today, markets are up 0.01%. For all intensive purposes, flat. The trading month-over-month was flatter than the Earth, which suggests that markets have shown some stability to the current narrative and what it's thrown at it, at least until the Fed changes course again or inflation reverses in the wrong direction, both of which we aren't expected to get any major updates on for at least the next few weeks. Perhaps even slightly after that, this next FOMC meeting isn't the most feared. Markets right now are in the cycle where they have been given the reasons to sell for like the last 6 months, and those reasons have been amplified in the last 3 months. And so folks that wanted to sell on those reasons have mostly sold. The ones that are looking at the market right now and deciding whether or not to sell are ones that, quite frankly, weren't as inclined to panic sell at the previous downtrends, and quite frankly don't have any new data and catalysts coming out in the near future, at least for the next few weeks. So this is the crucial period where you have some of those quiet buy and holders deciding whether or not it makes sense to sell. People who haven't capitulated during the worst days of this year, they're trying to make the judgment call on whether or not it makes sense holding. And it's these people that are going to lead the market to the next cycle. Whether or not we have any sort of retaining power in the overall market, or whether we just get completely bludgeoned, again like we've been bludgeoned the rest of the year. It's my personal view that inflation, the Fed, and really overall commodity prices are going to be the biggest drivers for the stock market for the next year, really. But if you want to know how much more fear is in the market and how much is behind the surface here, you want to really look at what is happening during this quiet period, where people aren't given an amplification of new reasons to sell, at least not like we were given a couple weeks ago and a couple months ago, but they are also not being given a lot of reasons to buy. When things get quiet, you have to pay attention. Okay, Mullen, all quiet, and then boom, screaming pop today, popping up from 91 cents to 156 at highs. Apparently Mullen didn't get the memo that small companies aren't ever supposed to go up again. But is Mullen worth mulling over? Mullen jumped today because the company reported positive results on their solid-state polymer battery testing in their Battery Innovation Center in Indiana. On the website press release, it says, quote, "It is expected that with this technology, when scaled to the vehicle pack level, a 150 kilowatt-hour solid-state battery can deliver over 600 miles of range on a full charge for the Mullen 5 EV crossover. In general, solid-state batteries offer higher energy density, faster charging times, smaller size, and safety compared to traditional lithium-ion cells." Okay, so the big takeaway here is that mileage estimate, 600 miles. That's quite a bit. They've talked about this number before, but this is them essentially saying that their test results are in line with expectations. If you trust this data and this is true, then Mullen has a lot of value. Whether or not Mullen even ever delivers a Mullen 5 or any sort of vehicle, it has some real value as a battery tech company, and potentially even an acquisition candidate, because these numbers sound like top of the industry based on mileage alone. What are some of the best ranges we have right now? Well, the top dog in range is that Lucid Air Dream Edition at 520 miles. The second is the Tesla Model S at 405 miles. Although if you get the decent looking wheels that don't look like shitty plastic, it takes off like 50 miles from the battery. But of course, the main advantage that Mullen would have is their vehicles are a lot cheaper. Their first branch of Mullen 5s are going to retail for $55K and so far are posted at a range of 325 miles per charge. If they can bolster this up to 600 miles and keep the price in that range, you'd expect them to be pretty damn competitive, or again, be at least a buyout candidate for somebody that could use that battery, which is why people are buying the stock today. Now that said, I'm always very skeptical when it comes to these types of claims. As somebody that's watched and analyzed a lot of different EV hopefuls over the last few years, I've learned to take pretty much everything with a grain of salt, which is why I've only covered Mullen as a very risky catalyst play, if anything, rather than a fundamental buy and hold play. And while we take EV hopefuls with a grain of salt, when it comes to super small cap EV companies that don't have a lot of money or a lot of experience or proof of concept, you have to take it with even a smaller grain of salt. The 600-mile number we've been hearing about for a while, and it's kind of been a cat and mouse game between people who don't believe it and people who do believe it, where when something good comes out about the battery, it rallies massively, and then shortly after, it sells off. On days where the media praises the stock, of course, it pumps, and then on days where the media is no longer talking about it, it dumps, which is kind of similar to any sort of catalyst play, but with this one, it's a little bit more dangerous because a lot of people really do believe all of the numbers that they're hearing, which is freaky. To me, it's always been suspicious when a small company can come out with some sort of insane revolutionary battery that beats all of the top tier incumbents in the field without having much capital spent or much of an experienced team, especially considering companies like Tesla, Toyota, Volkswagen, amongst many others, spend tons more money and have a lot more experience and have much more talented teams. Mullen is a company whose CEO's main background experience is from the music industry. Their battery R&D manager lists no prior commercial work experience outside of academia. I was reading some comments on my last Mullen video, which some people saw as overly critical, and a lot of folks said that, oh, experience isn't really needed for battery development. But the idea that you're just kind of born with all of this knowledge and ability to create revolutionary batteries with very little amounts of capital in a very short time period and completely just destroy all the other players in the race is just mind-blowing to me. Mullen also spends barely $1 million a quarter on total R&D, and that's actually gone up dramatically year over year. It used to be only like $500,000 a quarter. That buys you like nothing. If you want to pay the salaries of a good research team of like maybe just 10 people, that would take almost all that capital. Tesla, for example, spent $865 million in the last quarter on R&D. Now, obviously, Tesla is very well capitalized. But think about this for a second. How is it that Mullen can spend 1/800th of Tesla's R&D and with a much smaller team of very low experienced workers come out with something that's so much better than what Tesla has? Charlie, but Lucid beat Tesla. Tesla ain't good with battery development. They just spend lots of money and don't do well. Well, Lucid is still spending like around 180 times per quarter what Mullen is spending. But they've been investing in building this battery for years and it's already in production. With Mullen, they're still in the early experimental stages where battery development costs a lot more money, and presumably a lot of the R&D cost goes to the rest of the car as well. But hey, maybe they beat the odds and they didn't really need much money or much experience to develop a battery. Fine, but the problem is we've kind of been hearing the story for a while. That 600 number has been floated around for years. Back on August 10th, 2020, Mullen put out a press release saying that an independent lab provided evidence that the licensed technology may be capable of enabling electric vehicles to travel in excess of 600 miles. That independent testing firm was EV Grid. Mullen alleged that they said the results provided support that the company's licensed battery technology may be capable of enabling the electrical vehicle to travel 640 miles at a cruising speed of 55 miles per hour on a flat surface, blah. However, the CEO of EV Grid was asked about these statements and alleged praises on the Mullen battery, and this is what he said. No, we would never have said that. We never did say it, and certainly wouldn't have said it based on the results of testing that battery. Now, again, I'm not saying that Mullen can't be successful. Maybe they're in the early stages of developing a battery that may not be finished until 2035. But if markets really believe these claims that they have that kind of battery technology, this company would actually be worth a heck of a lot more. Unfortunately, though, there are other things I don't like about the company. One more example is the CEO was hyping up the Mullen vans in manufacturing of them. However, if you look at recent data from Import Genius, it shows that Mullen is actually ordering 2 vans that look very similar to the 2 models of vans that they say they're going to produce, and they're ordering them from Chinese manufacturers fully made. And it creates this picture, in my opinion at least, that Mullen is likely just going to buy vans from China and then rebrand them as Mullens like they've attempted to do in the past, when they rebranded John Way vans, but it never received certification to be sold in the US, so nothing happened to it. I'm not saying this is a rotten egg, but it's sure pretty damn smelly. And even if this was a golden goose, most early stage EV companies were going to get obliterated in this coming environment. There's a few, again, that I like that have proof of concept and a lot of capital to get through the times. Not many, though. However, as a catalyst hype spec risky trade, anything goes. It's just a question of how much your risk tolerance is. Now it's time for what I like. What I like, well, it's down 91% from highs that we hit in mid-November, creating a lot of extra perceived upward potential for hype trades. I also like that it pretty confidently declared support at around 75 cents back in mid-May, despite a lot of other companies making newer lows after that low. I also like the dedicated following of spec traders that seem to rush into this every single time you get a good catalyst. I also like that there's a potential catalyst with a promised and supposed alleged delivery of 500 commercial vans to some Fortune 500 company that the company has teased about. Although again, it seems like those vans are just going to be rebranded from China, and as of right now, Mullen does not have EPA certification, which means that they can't really have legally sold anything and have it be on the road for 12 to 18 months after they get that EPA certification. So anybody that's like, oh, well, they're going to be delivering in the next 3-4 months, I don't see how that's possible. But in terms of catalyst, just the mere talk of that and media coverage on such a low cap stock, such a low float stock, is going to be something that's very, very bullish to trade off of. But it's going to be pump and dumping. I love companies that can spike rapidly on news and have the ability to actually move. But you know what? You have to be very, very careful because they pump huge and then they dump huge. If you don't have clear risk management and an appetite to ride those types of trends, then you're going to be in a bad mamma jamma situation. I personally have no long or short position in this. I won't be taking one. I often try my hardest to cover stocks that people want to hear about, stocks that are moving, stocks that have some sort of catalyst, but I have to be straightforward with both the potential rewards as well as the potential risks. At the very core, anything is fair game for a trader who knows how to manage their risk. And with this especially, it's very, very true that you want to be able to trade the hype, but not let the hype trade you. So something to keep in mind. That caps off the video. Make sure to hit that ravishing like button and subscribe, and I'll see you in the next one. If you're looking to learn how to trade with our step-by-step lessons, private chat, daily morning briefings, as well as our full price target list, I'll put a link to ZipTrader you below with a nice coupon code that will get you a sizable discount before checkout. If you're looking to get up to 5 free stocks with Moo, I'll also put a link to them down below. Have a good one, folks, and I'll see you in the next video.